Good day, guys. So we just want to take a look at Crash 300, which is one of the instruments that they've managed to add onto their synthetic indices. We just want to go through it. We just want to go through the analysis so that some of you who trade it at least can have a rough idea of what we are looking forward to Crash 300 for this particular week. So make sure that you watch the video up until the end. Make sure you do us a favor by liking the video and also subscribing to the channel, which helps us to reach at least quite a number of people sharing this beautiful knowledge concerning the financial markets. So make sure you watch till the end and make sure you have liked the video and make sure you subscribe to the channel. So just a quick analysis. We're on the daily time frame. So being on the daily time frame, if ever we zoom out just to see what's currently happening on a major scale, you can actually see that Crash 300 has been in there's this major downward channel that it was following, right? So this is a major trend line, as you can see. So that major trend line, if you really notice, it was actually broken. After breaking a major trend line like that, it's actually one of the indications that most probably the market is about to reverse and to start to move to the opposite of where it was initially going. So after we've identified that, the next thing that we want to identify is our major key levels. Our major key levels, that is our major levels of resistance, support, our major levels of supply, demand, our major levels of fair value gaps, order blocks, all those things. So right now I'm just going to label this is a resistance, touch, broken like that, major resistance. Then we actually can also look to the left if ever there are any levels that the market might possibly respect. This is a level, resistance. This is a level, resistance. Any other level? This is a level. Right, already we can actually see that we now have quite a number of levels that we can actually see. So these levels are going to help us when it comes to targets, when it comes also to guiding us on our swing trades. For example, you always know that the market moves from one major zone to the next. So for example, here, this was a very major zone of resistance. This was a very strong resistance, broke out, came back down, broke out. So right now, most probably we're still having an expectation for the market to come back down before maybe continuing all the way to the upside. That is still an expectation that we're currently having for Crash 300 there, which can also be confirmed by this trend line that I'm about to draw, which is a counter trend line, which is a trend line for the current market structure, which is a bullish market structure that the market is currently moving in. So this one, I can simply remove it. So here upon the break and retest, one could have entered their buys there. You're simply okay. 1, 2, 3, 1, 2, 3, 4, 5, 6, almost 7 days, a week of holding buys. Imagine that, which is a good thing. So having seen that, this is what I'm expecting. I'm expecting a retest before a continuation to the upside to that resistance, which is my first target from where the market is. So that is a simple price action analysis. If you ever want to go deeper, you can also look at institutional trading. When you're looking at institutional trading, looking to the left, you realize here there was a simple break of structure here. Simple break of structure. After every break of structure, right, that's a break of structure there. Break of structure like this, right? So break of structure. After a break of structure, the market, we expect it to move because here it was downtrending. Then here the market actually established and managed to do what we call a change of character, somewhere around this level here. which is a change of character. Change of character, it means if ever it was bearish, it's now bullish. So that's a change of character. So we're all talking the same language, whether you call it a change of character, call it a shift in market structure, whatever you want to call it, we're all talking about the same stuff. So change of character. After change of character, we know that the market, we are now in a bullish market. Being in a bullish market, we always expect bullish movement. We always expect bullish movement. So I can actually clone this. Let me clone this, clone like that, and put it to the top, right? Let me try to put it at the top, something like this. Something like this. Because here I'm simply trying to show you the new channel that the market may actually start to move respecting. So, right. So, according to this change of character, if you check here, this order block, all these other order blocks, as the market was going up, they were actually mitigated. So the market, there's no need for it to come back all the way down here for it to retest that. But the only level that I'm seeing here, I'm seeing this fair value gap, the fair value gap here, which is also close to my zone. Fair value gap here, let me just put it in a different color. Fair value gap there. Right. So this fair value gap, it's a very interesting zone because the market, there's a double confluence there because it's a fair value gap and also a third trend line touch. So meaning if ever the market is going to come back all the way down there, we have double confirmation, we have bullish market structure, we have the fair value gap, and we also have a third trend line touch, and we also have a support, which are 4 confluences already, 4 major confluences to that particular trade. So once it comes there, you can simply take your buys nicely, targeting that level that I just marked there, that resistance, targeting that resistance as your first target for those buys that you are going to take. So far, this is what we are seeing on Crash 300. So going down to lower time frames, we're simply going there to identify any entry points or any other further confluences or further confirmations based on what we've just seen on a higher time frame. So here you can even draw it like this. You're still also correct. You're still also correct. You're still also correct. Then here you can just refine this. I just want to refine my channel here. Right. I just want to refine my channel like this. Like this. So if you check the channel, now it's more clear like this. So being clear like this, you can actually see that the market is coming from the top of the channel, which was, one could have taken sales there at the top, which was also fine. But when we're in a bullish market structure, if you actually know, I actually tend to like to focus on the direction where the market is currently going, which is the bullish side of things. So I'm more focused on the bullish side of things here in this case. I'm more focused on the bullish side of things. So here I can try to refine and look for a fair value gap that is closer, which is here. So around this level, that's where the market can actually come all the way down and respect. So it's a fair value gap and also a support, very strong support zone. So already I'm having those number of confluences. So here, if ever, let's say one wants to take this sell, which might be a counter trend, let's look on the lower time frames, what we can actually identify, what we can actually see on the lower time frames. If we'll get any confirmations, we'll simply take that sell up until the market drops all the way into the zone where we're expecting to continue buying, since we are now in a bullish market structure. Since we're now in a bullish market structure, so this is the zone. So according to what I'm seeing here, you can also see that we had a counter trend. Let me just put the counter trend from the bottom all the way to the top. Counter trend was broken, retested already. It means sales could have started here. One could have sold exactly here upon the retest. One could have actually started selling their Crash 300 exactly there on the retest. You could have actually entered your initial sales. right? Your target, remember, is there at the bottom, which we labeled based on the daily, right? So looking at the market right now, looking at the market right now, let me just remove this. Looking at the market right now where it is, let us identify entry points now, entry points. So let us identify entry points. Entry point. Can also see that we have a fair value gap here at the top. One can come and say we have an order block, but I'm seeing a fair value gap because it's actually lower than the order block, of which it was tapped. So the market might not even come all the way there to the top. It might not come all the way there. It might not come there. It might not even come all the way. But if it does come there, we can simply also take sells there. But I don't think it will get there. So looking closer, looking closer, looking closer. Let's look closer. Let's look closer and analyze. Let's look closer and analyze. So let us mark any other zones of significance. Any other zones of significance. Any other zones of significance. Right. I can see this level here. Broke, went above, broke. So right now, this level is a very key level now. Because if ever the market is respecting that level, it's going to actually confirm and also help us confirm that this bullish market structure, because this was a bullish market structure, higher highs, higher lows, higher high here, higher low, higher high. So here, this higher low was broken. After it was broken, we expect to form a lower high, which is this lower high, lower low. If ever it respects here, that's a lower high. So meaning it's still respecting bearish market structure, which we actually expect from a lower low, something like this, up until we reach all the way down. So it would have actually confirmed to us that it's simply respecting the bearish market structure, of which if ever we are not looking at that as well, you can also see that this is an order block. This is an order block where the market actually came back. So after breaking structure, if ever you want to look at it from an institutional perspective, that's a break of structure here. Break of structure. After the break of structure, the market came back to the order block or the supply zone. So how do you enter such trades when you're entering based on that? We enter our stop loss above the order block like this. Then our target, remember our target is still the same. Our target is still the same down here at the bottom, which is a 1:7 risk compared to reward. Risk compared to reward, which is also a good one, which is also a good one. Then if ever you want more confluence, let's see our Fibonacci. Looking at our Fibonacci, you realize that we're actually at around 38.2 Fibonacci, which is a good entry point as well, because it actually shows that the momentum to the downside is very strong. Adding further confluence, adding our 50 exponential moving average, you can also see that somehow it's still below. So let's get down to 30 minutes. Let's see if ever our entry point is also making sense on 30 minutes and 15 minutes. But so far, that's the analysis that we're currently seeing on Crash 300. I hope you have liked the video and I hope you have subscribed to the channel, because on a day-to-day basis, we give these beautiful gems, we give this beautiful analysis to help guide you on your journey, to also help you making sure that your trading journey is very, very profitable, and it's also very, 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 very consistently profitable. So here I'm actually realizing that we have actually another zone at the top, which is this zone, touch, broke, touch. So roughly, this is according to what I'm seeing in 30 minutes, the market can actually still push further to this zone, of which even still pushing further to this zone, according to institutional trading, this is a supply or an order block, which is also a good entry point that we can actually take there, which is actually a good entry point that we can actually decide to take there. So meaning the market can still push further here. the market can still push further here. If it comes there, we take our sell upon the rejection. Upon the rejection, we take our sell, our stop loss just above the zone, just like that. First target the previous low, which is here. Then the other target is the zone that we marked based on a daily time frame. But so far, this is what we are seeing. This is what we are seeing. You just wait for the market to tap into the zone that you're expecting. After it taps into that zone that you're anticipating for entry, wait for the rejection, something like a bearish engulfing candle, something like a shooting star. Then once you get that, you enter your trade. Then boom, we go all the way to where we are expecting. But so far, this is what I'm looking at. This is what I'm seeing. This is what I'm looking at. So that's where we're expecting our entry. That's where we're expecting our entry. Wait for the rejection. Once you get the rejection, then you jump in the trade. So crash 300, this is what we are seeing. If ever you want to be part of our community, feel free to join the Telegram group, and also feel free to contact us via WhatsApp. We have a free WhatsApp group, and we also have a paid focus mentorship where we actually have institutional and as well as retail trading strategies that we actually use for our trading. So if ever you want to be part of the focus mentorship, feel free to contact us through that WhatsApp number that is in the description below. Thank you for